Dear students, in this video, you're going to learn about how to implement the Heikin Ashi candlesticks within your Forex strategy. Let's do this. So first of all, what is Heikin Ashi? Heikin Ashi is a specific type of candlesticks. So that's a normal candlestick right there on our chart. And in order for you to get Heikin Ashi, click on this arrow and you'll need to scroll down to this section, Heikin Ashi. What it does is that it summarizes the average direction of the price. So it is very good at distinguishing where are the pullbacks and where is the impulses. So I'm going to teach you exactly how to implement this within our strategy. And it's a very useful tool in terms of knowing when to enter if you have any doubts about what is happening within the price action. So we are currently on EuroCAD. On EuroCAD, you can see right here, this is Tuesday, 6th of January. Okay, so here we have a pullback. So first of all, let's just start from the very beginning. The first thing we're looking at is for an impulsive move. So right here, we have an impulsive move. How do we know it is impulsive to the downside? We have our high-low day box right here and right here. And the low of the previous day closed below the low of the day before yesterday. Step number one. So at some points within this day, we are looking for sales. We are looking for sales at some point within this day. It is a 3-day structure, 3-day pattern. So our super trend, which is this black line, is also intact, which means that the price is still going bearish. In our meter, we got a signal right around this section. Okay, but as you can see, this signal was a bit late. We are on 1H time frame. Sometimes the signal comes in late, sometimes it comes on time. It all depends. So we have 4 dots right here, which signify that the price is about to go down. But on Heikin Ashi right here, what do we see? We have a doji candlesticks. We first have a move to the upside right here, followed by an indecision candle, which is a doji candle. So all this are blue. Then we finally got a black candle. That's a color change. Okay, it's very important. And this color change also signified that, so we had a move to the upside followed by an indecision candlestick, which is also a change of color, change of direction, change of market sentiment. Bulls, finally, bears are not in control, but this is not the time to enter yet. You need to wait for an engulfing to the downside. Once you see an engulfing right here, that is your signal to enter price right here. And that is actually 1 hour before we even got an indication on our trend meter for an entry. Once you see this on your Heikin Ashi candlesticks, you go back to normal candlesticks. Now, what is quite interesting about this example is that on the Heikin Ashi chart, we can see that our trend meter is giving us a signal right here. But if we go down to candlesticks, we actually got an earlier signal. We have 4 dots right here, which coincides with Heikin Ashi on the previous candlestick chart. So you need to play around with these 2 indicators that are really going to help you identify when to enter the market. So you can be conservative and place your stop loss right about here and aim for 3%, or you can be more aggressive and use the candlestick itself as an entry and gain more percentage. So how do you know how long to stay within the trade? Well, as long as you are seeing that there are black candles, okay, which means that the price is still going down, stay in the trade. Another trick is that focus on this gray black shadow within the trend meter. This gray black shadow behind the dots is showing us that the move to the downside is still strongly bearish, strongly bearish, strongly bearish. Now once that gray shadow stops, that actually signifies, look at it here, it signifies that the price is going sideways and there's no strong momentum in the market. As you can see, this is the gap in between the 2 gray shadows. As the move, the gray shadow stopped and the price started to go sideways. It started to consolidate. So that's that example. Let's go to a second example, which I have for you. Still EuroCAD on Friday, 2nd of January. So from the very beginning, impulse, we need yesterday's low to be below the day before yesterday. That's it right there. So that's step number one. Step number two, trend. The super trend is still intact. Everything is good. Step number three, we need an engulfing candlestick. But in this situation is that we are looking for a indecision candle, a doji candlestick. That doji candlestick happened right here. This one or this one, but I would prefer this one because it has the wick at the top and at the bottom are of equal size. This one, they're not really equal. That's equal size doji. That's equal size wick doji. So once you get this kind of doji, you are then waiting for there to be an engulfing impulsive move to the downside. We had one right here. This is it. And you can see that this engulfing candlestick on Heikin Ashi, it actually coincides with our trend meter and volume as well. The volume increased, as you can see, and we had 4 dots on a trend meter right there. So what do we do next? We then switch back to our normal candlesticks, and as you can see, this is our signal for the entry. It is a little bit late because on candlesticks this is actually the perfect place to enter right here, but hey, we got a signal around here. If you just use the candlestick itself as the stop loss, which is quite aggressive, that's your stop loss. Aim for a minimum of 3%. There you have it. If you were more conservative, you would place a stop loss right here, aim for the same 3%. You would have had to wait a little longer, but hey, this is it right there. How do you know when to come out of the trade? Good question. Once again, we zoom into the trend meter. As you can see, this is where we enter. Around this section, we are seeing the 4 dots, 1, 2, 3, and 4. And this gray box behind the dots is showing us that the trend is still going downwards. It's a continuous box. Once this gray shadow stops, that means that the market is about to enter an area of consolidation, indecision, which means that the price is about to start going sideways. So once this gray box stops, you can take your profit and call it a day. Very simple strategy. You should be able to get it in no time. Back test this consistently and most importantly correctly. Thank you for watching. Thank you for investing your time. And if you have any questions, send me a message. I'm here for you. I'll see you guys in the next one. Take care.